Okay guys, let's get the briefing up and running. Welcome to the session. Just looking at the charts here, one thing you'll notice about some of these charts, and perhaps let's just specifically pick this one out. This is the S&P. They're displaying a lot of flat-ish price behavior. We had this big spike here at the open. That's yesterday's open, right at the start of the Asian session, pricing in the Macron victory. So we did print above 2400 on the S&P, having just failed to get there on Friday night. And obviously this didn't last long, and immediately we chopped back lower, and the S&P spent the day flat to down, just briefly moving below the pivot just around the European close, but ultimately lifting and closing pretty much precisely unchanged, you would say, and you're getting a very similar pattern this morning. I mean, yesterday's range, alright, just take out that spike at the open, ignore that, and actually yesterday's range was about 8 points wide, and so far through the Asian session and the European Open we're printing inside of that range, so you know, very tight. And one thing to be aware of, and this is important, you know, when you're thinking about setting up your mindset for the day ahead, you know, you've got to be in touch and in tune with the market conditions. I always say, remember that, you know, ultimately as a trader, you can't, I mean, setting yourself daily targets is dangerous, because ultimately you're not in control of the amount and size of opportunity available to you on any day. You are absolutely not in control of that. There's only one thing that's in control of the amount of money you could potentially make, and that's the market. Market conditions will dictate that. And so, well, what are market conditions like? And I tell you what, market conditions are very, very subdued. I'm going to show you here a headline on the FT this morning. Wall Street's fear gauge falls to lowest levels since 1993. So this is talking about the VIX, and it closed below 10, and it hit 9.77 yesterday. If I give you an idea of what that looks like on the chart, you've actually got this is the chart looking back over the last 5 years or so, and this we had a print below 10 earlier in the year, but this was a print and a close below 10, and so setting lows. Well, let's put it this way, look at the text here. So we closed at 9.77, so that's the lowest close since December 1993. The gauge has only been lower on 3 days since its inception. Deutsche Bank Reed had a couple of good stats on this with regards to, you know, how many days. So look, the years that there has been a below 10 close was in 2007, where we had 1 day only where the VIX closed below 10. In 2006 we had 3 days only where the VIX closed below 10. In 1994 we had 1 day where it closed below 10, and in 1993 we had 4 days. So we'll see where we go from here, but the VIX has been measured and printed for 6,889 days in total, if you want to go back to its inception in 1990. And in total, let me count these, 4, 5, we've only ever had 9 closes at 6,889 days. Only 9 times has it closed below 10, which implies that the VIX is very low. It's very cheap on any measure you care to want to look at. So in theory then it's not sustainable. In theory this volatility level shouldn't last, and it's only ever lasted 4 days ever in history that's closing below 10. So we'll keep a track on this. Obviously the French election was a very market positive affair. We'd priced it in already though, and so I was asking you yesterday about, you know, what's on your horizon in terms of the most important sort of macro themes in the weeks and months to come, and we were talking about how we're looking out for that US inflation print at the end of this week. We are looking for June to be a big month, both from a central bank and a political point of view, where we've got the Federal Reserve expected to hike rates. We had Mester from the Fed. She said yesterday that, she's just promoting the idea that beginning to stop reinvesting and therefore begin to shrink their balance sheet. That's something that should go fine as long as we communicate it sensibly. So we're looking for the Fed to hike in June. We're looking for the ECB to change their language and begin to start looking at the potential for tapering. So here's what Weber said yesterday. So Weber sees the ECB announcing tapering around September. So this is Axel Weber, who was previously, vice president of the ECB, I think he was at one point. And so we're looking for the ECB to change their language in June and start talking about how economic risks are no longer skewed to the downside, but they're now neutral. And then, of course, we've got the small matter of a UK general election. And we've got an OPEC meeting. So June's really pretty big. So we're a few weeks off June, though, obviously. So we've got to be a little bit patient and just recognise the fact that volatility levels are low. That doesn't mean that there's no opportunity. If we look at the charts here, you just got to pick your ranges. I mean, patience is the most valuable commodity when news flow and market activity is slow. You shouldn't sit there thinking this is a waste of time. Nothing's moving. What's the point? There absolutely are opportunities. They're just fewer and farther between, and you've got to be patient, and profit expectation is lower. But you've got to be at the ready, because obviously anything can happen at any time. We've got plenty of, known unknowns, if you like, which is Trump. What's he going to do about North Korea, for example? We've got OPEC headline risk. Yesterday was a good example of that, and that's going to be ongoing. So there's potential for movement to come out of nowhere. It's just in terms of what's scheduled and planned, in terms of economic data, in terms of scheduled political events. Well, then, we're just in a little bit of a calm waters here until we get to that kind of key month of June. So talking about politics, we'll come back to the charts in a minute. Let's have a quick look at the French timeline. Here was a good graphic from the FT this morning. Just looking at the timeline, what next for France? Because obviously Macron has won, but that's just the half of it, because now we've got the French Parliament, and all 577 members are up for election. And so this is what's going to happen. On the 14th of May next week, we have the inauguration. So the French don't mess about. It's not like the US, where Trump got elected. Well, election day was the 8th of November. He then had to wait until the 20th of January till he actually got inaugurated and started his job. For the French, is 1 week. So Macron will be in the hot seat as of 14th of May. He will be the president, acting president. Currently, he's president-elect. What happens then? Legislative election contenders are announced. Okay, so this is where certainly we're going to, most significantly, we're going to hear from Macron, and who is he going to snap up to run for him, his En Marche party. This is kind of the mid-May action, all right? Then we got a gap. Once all that stuff's out of the way, we've got a gap until we get into June, when the election actually takes place. Now, again, like the presidential election, every single 577 seats all have to go through a two-stage election process, like the president. There's a slight difference, though. So on June the 11th, we'll have round one. That's all 577 seats. Everybody who wants to run for that seat, they're all in the mix, okay? Round one. Anybody who gets more than 12.5% of the vote, then goes through to round 2. So there's the difference with the presidential election. In the presidential election, it was just who was first and second in round 1, and only those 2 go into round 2. Well, here for the parliamentary seats, you can have more than 2 people in round 2. You could have 3, you could have 4. Well, I guess, let me think, mathematically, I guess you could have 6 people getting 12.5% of the vote. All right, so, and then the point is in round 2, whoever gets the most votes wins, but you don't have to get more than 50%. If you've got more than 2 of you running, you can win the seat with less than 50% of the vote, of course. Okay, so these the second round will be on June the 18th. If no candidate wins outright in the first round, I don't know what that means. I guess it's possible that no one gets 12.5% of the vote, perhaps. That would be fantastically unlikely, surely. But anyway, so, and then we also get first European Council meeting with Macron on June the 22nd. Okay, so this is the timeline for France. Just quickly looking at the parliamentary setup, because this En Marche party, which is just over a year old, some polls, well, let me qualify that. One poll is suggesting that they could come in and win a majority. That's an outright majority in Parliament, a party that didn't exist 15 months ago. The idea that now they've got the president and will become and will have an outright majority in Parliament is, I mean, this literally is rewriting political history. It's quite extraordinary. This is a Credit Suisse document produced. They're going for En Marche winning, well, between 249 and 286 seats in Parliament, giving them, well, the potential for a majority. The centre-right are expected to be the next biggest showing. The centre-left are expected to get killed here in this election. And the right-wing National Front, Le Pen, well, if you go back a few weeks, and the Front National were expected to win something like 60 seats, well, that's been pegged right back, and they're now only expected to win 20. So this is the kind of forecasting, and this is Credit Suisse's opinion in here as well, by the way. And there is an outside chance that Macron may well get an outright majority, which would be quite extraordinary. Of course, this would then allow him to fully implement his plan of action. There are 3 scenarios, which are, well, maybe more likely. It's probably unlikely En Marche are going to get a full outright majority on their own. So what's the coalition going to look like? So they might have to team up with the Socialist Party, the Socialists as a junior member. This would put then the centre-right party as the opposition, which would be a positive thing, you could say, because it keeps the far left or far right extremist parties out of the equation entirely. Maybe you could get Macron governing with a coalition with the centre-right. This is perhaps the more likely scenario, and this would be a grand coalition where you've got the 2 most popular parties forming a coalition, obviously therefore having a huge majority together. There could be a third option where Macron could govern in what's called a cohabitation. So this is if the centre-right gets a majority in Parliament. So that's if En Marche, who have the president, do badly in these elections, and you actually get an outright majority from a party that doesn't have the president. Of course, this is very incredibly unlikely and unusual, but it could happen, and that could be really the worst scenario. But just down the bottom, what does Macron want to do? Obviously, he's won the election and he's president. The parliamentary elections will ultimately shape and determine his ability to deliver on his mandate. Well, what's his mandate? So here are what are we, 7 bullet points, 7 bullet points on what he wants to do. Deepening of labour market reforms. Big focus on firm level flexibility and training. This is something that is desperately needed, not only in France, but just pop across the border to Italy. The 2 big giant economies in the EU that need immediate and huge labour market reform to become more efficient, to become more competitive. France and Italy, this is big time needed. Okay, obviously the socialist regime of Hollande have not been interested in delivering this, but this is big. Hopefully this starts to happen for France's sake. He wants to cut corporation tax. Currently it's 33%. Again, phenomenally uncompetitive. They're the second highest in the developed world. Only the US currently are the highest. And if Trump gets his way, of course, and France leave theirs at 33, well, France will be the highest. Again, very uncompetitive. Additional cuts in labour, social contributions. He wants wealth tax transformed into a property tax only. Currently, the highest earners in France get taxed 75%. So he wants to reshape the way the rich get taxed. He wants to cut public spending. He wants 50 billion euros invested. That's the infrastructure investment plan over 5 years. And he wants a pro-European measures to enhance the efficiency of the euro area. So that's what he wants to do. So these elections in June are going to shape whether he's going to be able to do it or not. Okay, so this is an update on France. Right, let's shift and move on. We'll hear more about this. This will be all over the press next week, of course, when he gets inaugurated on the 14th, this weekend, in fact. So let's move on. What else has been going on? German data this morning. Trade balance figures for March. Very, very impressive. Good data. Exports increased by 0.4% in March when we had expected an increase of 0.2%. Imports increased by 2.4%. versus the expected increase of 1%. Their trade balance overall 19.6 billion positive. So this was very good. Europe's trading powerhouse Germany showing no signs of a slowdown, and this is what Macron wants to do, and this is something that I think is interesting. The first person he called when he won the election was Merkel. And assuming Merkel wins her election, obviously later in the year, what Macron wants to do is very European. He's almost European first, French second. What he wants to do is persuade the Germans to lift the foot, put the foot on the gas in terms of spending money. He wants to persuade Germany to forget the idea of a surplus, and Germany got so much room to fiscally stimulate, and it wouldn't just be fiscal stimulus for Germany; it would be fiscal stimulus for Europe. So that's something Macron wants to do, and this data here this morning is very strong and continues to show that there's got to be room here for Germany to just take their foot off the brake. They've been very prudent, as is their nature historically. And it's time for Germany to there's a bit of momentum we've got in Europe at the moment. The data we've had the first half of this year has been the best data for years and years, and to continue that momentum, just Germany take the foot off the austerity brake slightly would be good news for all. So this is something Macron is going to want to try and push. Other headlines overnight: Aussie dollar slips to a 4-month low. This is off the back of retail sales coming in negatively. The Aussie dollar's had a bad few weeks. Here's a chart showing you the Aussie dollar versus the US dollar, and a bad few weeks in that we've dropped below the April low. Some of these lines are slightly off, sorry. Obviously we've got a cycle low, key double bottom for the Aussie. You've got, which is the May low from last year, and then the December low from last year. The key double bottom here, which is down around 0.7146. Obviously we're a long way off that at this point, but certainly this range we've been in for the last year is still playing out very nicely. Other headlines to be aware of: UK still on the retail sales front. Now we're looking at the UK, and actually we've got some really strong data on this, thankfully, because the data we got from the UK on retail sales for Q1 was shocking. It was the worst quarter for retail sales for 5 or 6 years. Well, we got a strong rebound here. So percentage change on retail sales in April, this is a rolling 3-month average, I should say, is 2%. Now there are some Easter retail effects in here. Easter was in April this year rather than March last year, and so this just plays a little bit of havoc with the year-on-year comparisons, so that needs to be factored in here. So this looks like this big jump higher perhaps isn't anything to get overly excited about, and is perhaps just seasonality factors, given that April shifted, Easter was in April, boosting this year's retail sales figures. All right, so really we need to wait for next month's data to really get a clearer sign on where we are here, and whether inflationary pressures in the UK are having an ongoing negative effect or not. Other stuff then, I think I've covered all the headlines actually, so let's just have a quick look at the data, economic data calendar before we finish on the charts. So as I was saying earlier, you know, in terms of scheduled news flow, again a quiet session. Remember, we've got to wait for Friday, particularly for key US data. We've got a very busy afternoon on Friday for US data. We've got a busy afternoon on Thursday because it's Super Thursday, the Bank of England, with a Carney press conference, with a quarterly inflation report and the rest of it. So that'll keep us interested on Thursday. Tuesday and Wednesday less so in terms of scheduled stuff. Now we've had all the trade numbers out of Germany. French CPI was delivered at 7:45. Just looking at my headline feed, actually, that didn't get. I think we've got discrepancy in the data calendar here. Anyway, Italy, we've got retail sales figures from at 9 o'clock. Then we're into the US stuff, and none of this is massively key. JOLTS job openings numbers, that's for March. So we already had the payrolls report for April, end of last week, so this JOLTS number is not massively important. We get economic optimism numbers. We got some Fed speak. Kaplan, the only one that's inside European hours. Plenty of bond issuance today, including some German 2046, so very long duration, you know, almost 30-year index linkers here. UK trying to shift some 2019 two-year gilts. You've got a big 24 billion issuance, three-year notes coming out of the US. So you've got a lot of bond issuance here today. And if we flick back to the chart, this is something that might just be playing a role in shaping what happened yesterday in the bond market space and what's happening today so far this morning. You're not getting much action anywhere else, but certainly T-notes drifted lower throughout yesterday. Well, hang on, let me correct that. To start with, we pushed higher, but in the end it turned into a negative session, and we've just added to that. We just slipped below yesterday's low now, and we got the low from last week on Friday as a target at 124.27.5. So you know, because you've got a lot of issuance coming on, this does tend to create a little bit of downside bias as traders sell out of some existing holdings in order to raise cash to buy the new issuance. Okay, so this is something that's just playing out in what is otherwise a quiet market. The S&P, as I said, flat. If you let's look at the DAX though, from a European perspective. Such a powerful session on Friday to new all-time highs. Given back most of it yesterday. Key support found at Thursday's high, 12,663. Just steadied the ship yesterday morning, and then it turned into an uneventful day. This morning we have opened a little higher, and the pivot is currently, well, we're sat right on the pivot at the moment, and that's just doing the business as resistance. But we're kind of right in the middle of that Friday range at the moment, which makes it tricky to judge direction. If we have a look at the euro, well, the euro, we had that break lower just after 7 a.m. and that's been recovered now. It's a little bit messy here technically, because you could well have been looking for some classic shorts. You know, the trend has certainly been to the downside ever since the open high print on Monday's Asian session in immediate response to Macron's win, where we printed up at 110.40 almost, 110.36 on the futures, and since then it's been a downward trending scenario. So you'll have been forgiven for a classic short here. There was a brief opportunity to actually get that to work if you book profit back at the low pretty quickly. But here we're breaking back up above yesterday's low now. And so perhaps looking for the overnight or this morning high at 109.54 as kind of next resistance. It's just a little tricky to gauge direction when you got volume so light and conditions so slow. Cable has popped up through the... I'm just making new highs here on cable. So you've got perhaps a bit of dollar weakness as I speak, but double top is the kind of technical point to look out for cable. That's Friday's high and yesterday's high up on the 130 handle for the futures. What else? Let's talk commodities to finish. Gold. Again, it's just tricky, you know. Open low for gold off the French election result yesterday. Then it all reversed straight away, and we're kind of flirting with some resistance that we had back on Friday. So Friday's high, if I just move that line down, Friday's high at 12.36, basically doing the job. We did move above it briefly yesterday morning, but then it all kind of reversed lower. So we're in this range that we've been in since Thursday. Obviously, we had a very negative week last week for gold. But since Thursday, we've been flat with that Monday kind of low ball print. If I add another line in here, which was Thursday's low, which has been quite effective today, and indeed yesterday's low being defined by it. So keep an eye on that. But we're just drifting a little bit here. Having sold off quite steeply last week, gold just trying to consolidate now. With the VIX being at record ever lows, it's perhaps interesting that you're getting the gold flatten off. Normally if the VIX goes down, gold goes down. Let's finally finish on oil. A few little blips here and there off headlines from OPEC. Quite a busy period yesterday for OPEC headlines, remember. Saudi saying, well, maybe we'll extend cuts beyond 2017 and make the cut extension more than 6 months. Then we had chat about how, well, maybe actually we can deepen the cuts, make even more cuts. We've got Iran in the mix. You know, are they going to be prepared to freeze output production? Iran, of course, have been raising production. What do Iraq feel about this? So we're going to have plenty more headlines here as we go into June. But I was just talking to Will about this yesterday. The OPEC have controlled the price of oil for 40 years. They have, in the last couple of years, they have lost control almost entirely. Shale producers in the US are going to produce more. The efficiencies they've driven through has been remarkable. And they are now in control of global supply. And the OPEC, they're kind of damned if they do and damned if they don't. What I mean by that is if they cut production, well, all right, great, price goes up, but then they're producing more. Oh, sorry, no, they're producing less, apologies. So they're selling less at a higher price. But the other point is a higher price just makes the shale industry, it gives them the ability to ramp production even higher. So you'll get more production increase flow coming in on the US side. So it's like if OPEC cut production, they're just handing revenue to shale producers in the US. But then if OPEC increase production, well, they're going to drive the price even lower, and it'll break below 40. And of course, they're so dependent on oil revenue. Selling barrels of oil below $40 is just not going to be feasible. So they're just literally trapped here. I mean, what do they do? I think all they've got to do, I would say, is they've got to carry on. They've got to extend their cuts to at least the end of the year. I would say extend the cuts, and I reckon they should communicate that they're going to look at potentially deepening the cuts in November, which is when we get the next OPEC meeting. Maybe that's a strategy to try and talk price up, but they don't want price to go too high, as then it plays into the shale producers' hands. So it's a bit of a nightmare, I have to say, for OPEC. How they get this strategy right, I'm not quite sure. I'm not sure it's possible to get it right. Anyway, we'll see. OPEC meeting in June. Right, I'm going to leave you to it, guys. Next data, sorry, I've missed the Italian data, which came in slightly worse than expected. Retail sales for March in Italy flat when we expected a growth of 0.2%. Year on year down 0.4 when we had expected an increase of 0.8. But you're not getting any price action here off this stuff. Right, I'll leave you to it, guys. Stay patient today. It's all about patience. It's about modest profit expectations. Patience and modest profit expectations. That doesn't mean there's no opportunity. There is. You just got to work a little bit harder for it. You've got to work a little bit harder for a little bit less, which I know is not ideal. But as I said at the start, you're not in control of the opportunity that is given. That's the market's job. All right, over and out.